morning, guten Morgen. It is Monday, August 20th, 2018. Daily Forex trading strategy session. All right, so back in January, we said this would be moving week. This is when the markets might turn. Any particular reason this week? Oops. Oh, I clicked that stupid thing. There we go. End of vacation? Yeah. Summer holidays? Yeah. But what economic event happens? This is sort of like a turning point. So like I say, summer begins the day after the June Fed meeting. Yeah, but you don't call it FOMC. Well, it's not FOMC. And it is a Fed meeting by St. Louis Fed, but what do you call it? Jackson Hole, baby. Yeah, so it's just one of those things. It used to never really be important. It was never really on people's radar screen, and then it was. So now it's just a thing. You know, I don't know. There shouldn't be anything amazing that comes from it, but it's something to look for. I don't know. It's news. It's something that news outlets sell us, and we're consumers of news, so we buy it, and there you go. But yeah, it is something. So what happens is the St. Louis Fed throws this event in Jackson Hole, Wyoming, beautiful, beautiful part of the world, and they go out there and they babble to each other. So anyways, and there's a few events. So I think it's Friday, Powell does a speech. So we'll sit around all week waiting for Powell to do a speech. Most people fall asleep this time of year and at their own peril. So I think what you'll see is this week we'll have a theme of potential reversals. Okay. So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk when you cannot afford to lose. My name is Wayne McDonell. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay. Please visit TradersWay.com and open an account. Even a demo. A demo account takes you like 30 seconds. Boom. You will be able to check out our execution speed, check out our spreads. And if you need, ping customer service, say hi. Meeting minutes being released today. You know, I didn't look at a calendar for today, but meeting minutes are not generally released on Mondays. Okay. Will gold go to 1050 again? Well, why don't we take a look? Okay. All right. So let's just zip over. Yeah, there shouldn't be anything today. Let me kill this because sometimes this plays for you guys in the background, depending on what browser. Oops, I just deleted the wrong thing. Hang on. Let's do this again. Ding, 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 ding. It's just a beast under your bed. Did you guys like the jazz version or the Metallica version? Yeah, the jazz one was pretty cool. Yeah. All right, let us begin now. Potential reversals. All right, we'll start top left. Aussie yen. That's a 4 hour. Let me back out a little bit more. Okay, let's see. Drawing tool. Change colors. All right, good, ready to go. All right, this was a sell zone for August, and this was the target for that sell zone in August. Seems like a reasonable time to potentially put together a reversal. What we've already done here is an inverse head and shoulders. Oops. There it is. What we've done here is an inverse head and shoulders, and we measured the bottom to the neckline and produced this line here that goes up, and this distance is the same distance from the neckline to the crown. So all I did was take this number of pips and extend it up, and that's why we've taken the right shoulder here and projected this up to here, and so far so good. And what we're thinking here, so you have to go back in time. When we hit this around the 10th or 12th, we talked about this being the monthly target. This was a weekly target, I think, or maybe this was the weekly target. I guess this was the weekly target. So to hit all of that early, that gives you the potential to go back to the central, right? It's a counter trend. So there, with that logic, then we said, well, there's no evidence of that happening yet, but if it were to happen, what would it look like? And put all this together as an inverse head and shoulders. And here we are. What do you think? It's got some potential, right? At what point do you get involved is the real question. Okay. And you might want to say this, right? That's a typical entry, right? Or you wait for what you can confirm is a higher high. So maybe you get the next one like this. Okay. So if you recall in a previous webinar, we hadn't made this move yet. We were still here. So I said, well, what could happen is you come down. Of course, that's why this left thing is highlighted. I believe that's not a pivot. That's my drawing. But anyways, what we said is if it did happen and it did pull back, you could start looking for like this, right? And you can draw that using MT4. Like that. Okay. Cool, right? So once again, you have to ask yourself, if you do believe it is reversing, at what point do you participate? We all have different answers for that. Okay. But you should put that on your radar screen if you were looking. Now remember, just what was it, 3 weeks ago, 2 weeks ago? It seemed like there was no way in hell this was going to go back up. But it did complete the monthly target, right? So one thing that you should be super happy with is this fulfilled its mission. Mission accomplished, right? And if you really take a close look, it seems to be like within the pip. Like it was perfectly fulfilled. Anyone that shorted way up here 15 or 16 days earlier got it down to the exact pip they were hoping for 16 days earlier. To the pip. To the pip! So I would argue that this is not a random walk. Okay. That's how I would argue that. All right, so for those that are trading kitty cat, leads, okay, what we have here is failure to communicate, right? This is the plan that we have on the screen right now, right? Cool, right? Pretty straightforward. So it really comes down to whether you are participating in it or not. And you don't have to, obviously, if you're a bull on this. But let's zoom in. Do we have pieces? Because this goes, oops, this goes back a while. Zoom in. So the weekly plan here is to get short at this gray zone. So what would if you were a bear on this, what's the trade plan for this week? Your strategy is it's going to do this, right? That's your strategy. What's the tactics? Well said, John. I love that. I think that should be a t-shirt. Okay. Anyone that has that as a trade plan wants to sell here. Okay. Now we know bulls are here. So let's drop into a smaller time frame. Okay, bears, what's the plan? I got that Metallica stuck in my head now. Stuck in my head. So now you got to like put a tactical entry on this, right? You have to ask yourself, what if that's the top, not this? But moving averages are important. Are these moving averages giving you clarity? Well, what they actually kind of say is up to the 200 and then this or this. The 200 doesn't tell you direction. But that's just this time frame. So I'd say, well, that's not too helpful. How about this one? That says sell, 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 sell hard. Okay. Right? That's what the 21 is there for, right? So bears are definitely going to try to sell this. They would love to sell this. And this is the Alamo. Okay. That's the trade plan if you're a bear. If you're a bull, you already bought it here. There really isn't any other place to buy it except here, if you're a bull. Disappear. Okay, this is the Alamo because, well, see, I'm thinking in terms of nearer term. So as far as swing trading is concerned, this is the zone. After that, it's just not bearish anymore. So if it goes way up here, you could still sell this high. It's just not bearish anymore. Now you're ranging. Or even worse, if you're a bear, it'll break out to the upside and it'll be trending up. So look, if it's going to fall today and hit our target, or not today, this week, it's either going to do it right here or right here. Okay, those are my two zones. If it's up here and I'm a bear, I don't know. I guess if we were up here tomorrow on a Tuesday and we just skyrocketed through all of this and hit this early, okay, maybe I'll do the counter trade. But even then, counter trend trading is not fun. It feels dirty. It's like, yeah, I made 50 pips, but it was a counter trend. And everyone's like, oh, really? I'm like, yeah, I needed the money. We all make mistakes. I needed the money. I was desperate. Counter trend traded. I feel so dirty. I cried in the shower afterwards. Oh. So anyways, I hope that helps. If you're a bear, that's it, bro. Brooks long in here, which is the right thing to do if you're a bull. Beautiful trade. Yeah, only time will tell, right? If Brooke gets this right, this will head up. Okay. Euro dollar. Yep. Right. Swing trading, very easy on this one. Okay, yeah, you even had a Friday front run, that's all right. Bears, here's your plan for the week. Yay! Very complicated, I know, right? But the other thing we already discussed last week was this. And bulls are expecting to see okay, those are the two likely plans for the week. Do bears have the right to think bearish? Yes, they do. Do bulls have the right to think bullishly? Yeah, this is definitely a reversal pattern. Okay, so both have permission. That's why you need to make a decision. There's no clear answer on the chart. I only know where to buy and I only know where to sell. I don't know who's going to win. I don't know if bulls are going to win. I don't know if bears are going to win. I don't know if this is going to be higher next week, lower next week. That's why you flip a coin if you have to and say, well, it's one or the other. Right? So you're like, I missed this one, so maybe I'll try that. Great. Okay. But if you're a bear, you should have sold this out like yesterday. Like, why didn't you do that yesterday, right? It's just the beast under your bed. right? You see this? Like if you're a bear, look, you would have been just screaming when your charts opened, right? Like, oh, if you were a bear and you got that, it's like amazing, ridiculous, unbelievable that the market gods gave you an absolute perfect entry. Holy schnicker schnocker. Wow. Is that beautiful or what? Okay. If you're a bear, then you swing trade. Great. Bulls have this. They're like, ooh, that's out of position. So last night, right, 5 p.m. New York time on a Sunday, a bull would have saw that and said, ooh, that's a high open. I'd like to catch it here or here. Easy peasy lemon squeezy, right? And of course, the swing trading group's going to cover all these things on Fridays, which is really cool, so that you're ready on Sunday. Everyone, you have the invitation, right? Is anyone trying to get into the swing trading group but didn't get an invitation? We're starting on Friday. You sent me an email. Send me another email. Yeah. Ready to go, bro. 17 weeks of swing trading. Now we just have to. Oh, I don't know how to download MT4 on Mac. Sorry, bro. I'm not a Mac guy. Throw your Mac away, go buy yourself a $300 PC. Well, don't throw your Mac away. Just buy a $300 PC. In the United States of America, you have to do stuff like that because when the IRS shows up, and the IRS will show up, especially if you're making a lot of money or losing a lot of money, they're going to show up and they're like, what's up, bro? And they'll say, oh, you have a really fancy computer. And you're like, yeah, I spent a lot of money on it so I can trade. And they're like, do you check your personal email on that? Do you surf YouTube videos on that? Do you play music on that? Oh, well, that's not business. You can't write that whole thing off. So my first trading computer, and even one of the first things I do is I uninstall the sound drivers. So then they're like, do you play video games on this? Do you watch videos on this? I'm like, no, I don't. There's no sound. Right? So you should have a dedicated machine for trading. Right? And I don't have as cool of a setup as I used to. I used to have a better setup, but I used to have my trading PC behind me, right? And then in my closet, I had 3 HPs in boxes. Okay? Each one I'd taken out. Each one ran 6 screens each. Okay? And I'd taken them out of the box. I installed my trading platform and my standard layouts, so just MT4 in my layouts, and put them back in the box. So I had 3 of them in my closet. So the plan is one day I'm trading and all of a sudden my PC dies, right? I can walk over the closet, pull it out of the box, plug it into the same power outlet, right? Unplug the 6 screens from my dead computer, plug the cables into the new one, turn it on, and I'm up and running in less than a minute. But then I had them for like 5 years, and never used them, so they got obsolete. So so I sold them. Pretty neat though, right? That's a cool setup when you got hot swappable trading computers. Those were the days. Yeah, it's totally a nice system. Because the thing is, it's like $300-400 to have a backup machine. Like $300 or $400. When I started, it was $3,000 to get a trading computer. Now it's $300-400. All right, so let's move on. How do you join the swing? Okay, you have to go to fxbootcamp.com, sign up for either the swing trading course or buy the bundle of all the courses, complete the swing trading course, and then you can join the swing trading group. The system won't let you join the group until you've completed the course, because the group isn't about teach. I don't hold your hand in the group. In the group, we trade together, setting up trades for the next week. So we're setting up 1 to 300 pip trades early before the week. We set up Monday and Tuesday's trades on Friday. So that's how you do that. All right, so let's move on.com. Okay. Look at this. Do you guys remember? It's either going to go up here or it's going to go up here. This is oil. We'll see what happens. Okay. But once again, swing traders short selling this drove it all the way down to the target. Well, actually, it's not quite to the target. So for some reason, I have this as a support. Oh, okay. So it's price action support. The actual, so you know what? This sets up vulnerability here. This sets up vulnerability. Whoever shorted here has absolute full intention of driving it down to here. That's what they intended here. So, all right. So, oops. Don't be shocked, even though I have this arrow going up based on price action. That's obviously support, right? Don't be shocked if we get that sort of Arctic turtle that we talked about a couple of weeks ago, where we get a quick dip and then a pop. Because these guys really want to hit this, and these guys are ready to flip. You know, everyone's ready to flip, but these guys just don't want to get out until we get down there. So you kind of want to help them out. Think about it. Bulls want it to go up, but for them to get paid, you got to squeeze all the bears out. So if you know there's bears that want to get down here, you kind of want to let them get what they want, because if they're down here, then they get out. Then you trade, right? So, okay, yeah, so it can do the 64, Barry, right? But don't be shocked. Like, don't live like that is some, you know, divine number. It is support. There's no doubt about it. It's weekly support. It's price action support. It's support. It's support. And we're expecting a reversal. I am bullish on global macro. I could be wrong, but I am bullish on macro. But all of that aside, it has nothing to do with anything. This could still just drop because that's what these guys wanted. It's sort of part of the destiny. It won't change anything. It just maybe makes this even easier. Right? Oh, well, my pleasure. Okay, so it can do what I said quite a long time ago. I think I did this on the first day of the month, didn't I? up here or up here. I think I did on August 1st, and it's August 20th or something. So anyways, that's what we said 3 weeks ago. Not bad, right? It did consolidate here before it dropped to the next level. Okay. But it will not change anything at all if it does this first. Okay. So if it does that, don't say, oh, well, then, that's it. I'm the bear. Whoa, 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 whoa. Okay. Yeah. Okay. But, then again, it doesn't have to do that either. This is enough, but it's not bearish yet. I mean, oh my gosh. So why not sell it one more time if you're a bear? Why wouldn't you sell this one more time? And in fact, you probably would sell it one more time unless you were really super concerned about this area here being the bottom. But if that's true, I think you would have gotten out on Friday, like I said, or even Thursday, like I said. So you should be out. So maybe in that case, you do try it again. I mean, if you're already out anyways, maybe you give it one more shot. So yeah, you know what? They'll probably give it one more shot. If I was a bear on oil, I don't see why I wouldn't. Like, for example, let's go into an hourly chart, or maybe even a 15-minute chart. Okay. The front run on Friday was here, right? Bearish front run. That's why we do the swing trading group on Fridays. So someone may have shorted that, or they'll try again here, or add to it there, and they're going to try to drive that down. But more importantly is that 21. Well, Jeremy, 65 is just 65. It's a psych number. And you'll see the psych numbers are even more important when nobody's trading. Right? So yeah, where it goes from here it will be very telling. But don't, so like I was trying to explain, I guess, if it dropped from 64, 65, so I said 64. So if it dropped from 64 to like 61 or whatever the number was, don't say, oh, well, that's very telling. This tells me that this is going to be bearish and blah, blah. No, 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 no. No, it just means there are still some monthly swing traders in there. And then if we can get them out, there's no more bears. You see? And if the bears are out, it's the bulls' opportunity to party. We don't know if they'll even get into the trade, but they certainly could. There'd be a lot of bearish weakness, right? So the bulls would take over at 62, let's say, instead of 64. Doesn't mean anything. It was just we needed one more opportunity to squeeze some bears out. Whether it's for profit or for loss, right? How do you squeeze a bear out of a falling market? Well, limit orders or stop orders. So squeeze the confident ones out by letting them hit their target, and then drive it back up and squeeze all the lazy ones out that are late or didn't manage their trade properly. Squeeze them out by hitting their stops. But it'll be easier to hit the stops if the smart, aggressive ones are out on the sidelines, right? All right, pig dog, boop, 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 pig dog. We're on my pretty little red line. Isn't that cool? Cool, right? This red line. Huh. It's not perfect, but it seems like it's interesting, right? We are done this monthly swing. So what could you look for this week? It's a little dangerous counter trend trading. You could do it, right? But boy, oh boy, wait for something to drop like a ton of bricks and then buy it. So if you were, though, on a weekly basis, what pivot would you prefer buying? What's the preferable bullish pivot for the week? Well, I'll answer that so you don't have to. Let's go to a 15-minute chart. On Sunday afternoon, you would have wanted to buy this price. Was it 127? Now again, swing trading group meets on Fridays, so we could discuss situations like that so that you could buy it on Friday instead of waiting for Monday, because most people, their charts open on Monday and they're like, oh shoot, I wish I had got it down at 127 instead of 127.50. Yeah, well, you know, some people love starting the week up 50 pips. Well, you know what it probably is? It's probably the Turks cashing out of their U.S. treasuries and bringing their money home to prop up the lira. Hey, I said that with a straight face. Oh my gosh. So how's Turkey going to get out of their mess? What is Turkey's problem? Does anybody know? Well, whoa, Venice, by the way, that brings up a whole nother one. Jay says Bitcoin. Did you see Venezuela today? I haven't had time to research it, but do you see what they did today? Their currency dropped 95%. Yeah. So while they devalued their old currency on purpose, they started a new, I haven't done the research yet. I only read the headline. They call it like a cryptocurrency style new currency, the something Bolivar, the Petro Bolivar, and they're backing it with their oil reserves. So I don't know about that. Jay says, yeah. Well, so if they don't have a hard currency, then I guess this is a soft currency. Well, going back to Turkey, what's the lowest interest rates have ever been in Turkey, ever? I don't know, 10%? Like, you know how interest rates went to zero in the United States? I think the lowest ever in the history of Turkey would have been fairly recently, right? And it was probably only 10 or 11%. You'll never see that again in your lifetime, kind of thing, right? But what was it in the United States? Zero. Nearly zero, right? And in Europe, zero. Switzerland, negative zero, right? So what did the good banks of Turkey do? Probably under direct order and threat by the government, but let's just say, what did Turkey do? A country with a mindset of, we're at 11%, and that's crazy good, because you know it's going to be 20% and 30%. You just know it, right? So it's not even the fact that Turkey had 10% or 11% or 12%, whatever it was. No, just throw that away, because even the Turks don't care. Because when you live in a country where like our good friends in South Africa will tell you, like Ryan said, I think about a year ago, he said he broke his glasses, so he went to the same shop where he bought his glasses a year earlier. Same shop, same pair of glasses, twice as much money. Because the rand was so much less than the year earlier. And now, by the way, it would be double that again in another year. So when you live in a place where the cost of your glasses will double in 12 months and then double again in 12 months again, right? So your $100 pair of glasses are now $500, and it's only been 2 years. You're $100, right? Like if you live in a developed economy that exports inflation, you're not used to that. You just go and it's the same price. Shoot, it might even be cheaper. No joke. So what do you do when you live in a country where life is like that? And all of a sudden Europe says, hey, I'll just give you money for free. Shoot, I'll even pay you to take my money. That's what Switzerland said. Take as much money as you can possibly borrow, and we will pay you to do it. What would Turkey do? You want to build a shopping mall. You want a loan in lira? Where do you know, right? Or look, all right, let me tell you. If you're Turkey and you want to build a mall, okay? Or you want to expand your airport, build a port, or just buy a house, buy a hotel, build a bridge, embezzle as much as you possibly can for government money. Whatever you want to do, you want to borrow that free money. Especially when you know your interest rates in a 10-year period could be 30, 40%. You're like, and then you go back to Switzerland and you're like, let me get this straight. You will lend me $1 billion and pay me $150 million, and pay me $15 million a year premium? Then you stop again. You're like, no, you will give me $1 billion of your money and then pay me $15 million a year to do it? Like, it's weird, isn't it? Like, you're totally scamming me, right? Like, imagine that, guys. Imagine that world. That's where we were. Actually, we're still there. You're going to pay me $15 million a year salary, essentially, because I can use $1 billion of your money? Right? It just doesn't make sense. That's what Switzerland does, negative interest rates. They'll give you money and then pay you for it. You're like, whoa, but that weakens the Swiss franc. So now you're Turkey and you're like, you're trying to explain it to your boss. You're like, okay, instead of borrowing lira, we can borrow Swiss franc. So we have the money now to build. We're not going to have to worry about inflation going to 30% because they've never had 30% in interest rates. So that'll never happen. But here's the thing. They'll also pay us $15 million a year in interest. Let's do it, right? Yes. So here's what happens now. all these loans are borrowed in dollar and euro. But let's say in dollar, because it, right? In dollar, reserve currency. Dollar denominated loans. The shopping mall, the airport, the bridge, the skyscraper, the hotel, the port. It's all in dollars, okay? Which is cool. Everything's good until what point? Well, okay. Coup d'etat. That certainly didn't help. Crazy dictator. That didn't help, okay? How about the Turkish economy? What does Turkey export? Nothing. Right? What does it import? A lot. All right, so there's some economic problems there, right? So now let's just pretend no crazy dictator, no coup d'etat, none of that. Let's just keep things normal. They don't export a whole lot in the terms of the, of the world. They import quite a bit, right? You just look at their import-export data. So it's just subjective. In this case, I'm just saying, I mean, of course, Turkey exports, but let's just say relative to their imports, they don't export nearly enough, right? They import a lot. Okay, great. They have a lot of debt, and the debt's in dollars. Well, if they don't export, right, like, where do they lack foreign reserves. So what happens now when the Fed decides to start raising interest rates and all that debt is tied to the dollar? What happens to the USD? It gets more and more expensive, 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 which makes the loans more and more expensive, more and more expensive, and they have to pay it back in dollars. So what if the economy starts to slow, the lira starts to lose value, and the dollar is going up? Now it's a double whammy. Now loans are up 20, 30%. And I'm not even talking about the recent collapse, but I'm just saying under normal situations, right? Now your loan is 30 or 40% more expensive. Now your project's not even profitable. Now that's a problem, right? And here's the thing. You don't have dollars. So how do you get dollars to pay back your loan? Of course they won't, of course. That's the whole point. So how do you get the dollars to pay back your loan? To make your loan payments. By the way, Turkey has 70 billion coming up they need to pay. So how do they get this? How do they get the 70 billion? USD. How do they get the 70 billion? Besides that, just normal. Come on. Come on, guys. The freaking foreign exchange market, This is what we do, guys. Come on. The foreign exchange market. So they sell their lira to buy the dollar. They have to sell a heck of a lot more lira than they used to because their lira is weakened. Plus, the dollar strengthened. So now they have to flood the market with even more lira to get dollar. Okay, you see the problem now? So this really starts to hurt. Okay, this really starts to hurt. Because then the dollar gets even stronger, the lira gets even weaker, and it's this destructive cycle. Okay, and then now let's really put it together. So that's bad, right? And then you get a coup d'etat. Then you get sort of a dictator, leader, quasi whatever Erdogan is, who's killing democracy, shutting down capitalism, doing all these other things that look really, really, really strange. Okay? But what else is Turkey going to do? So, for example, do you remember Russia collapsed just a few years ago? And the ruble just tanked. You remember that? Evelyn says he is a strong president. Yeah, but he's okay. I'm not Turkish, so I don't even have the right to comment. I don't know all the details about Erdogan. I admit that as well. And all I have is a Western outside point of view being told to me about those crazy Turks. I totally get all that. I'm trying to keep it like as focused on economics as possible. Okay? But Erdogan is quite different. You know, when I hear Erdogan is on TV saying it's a Western conspiracy against Turkey, what did I say 2 weeks ago? Most people in America, they don't even know where Turkey is. They didn't even know it was a country a year ago. Now it's in the news. They're like, Turkey? Oh, that's a funny name. I mean, dude, like Americans, there's no conspiracy, right? And then I look at the facts. I'm like, Turkey's not exporting anything, so they're not doing any foreign exchange business except selling lira on the open market to import stuff. That weakens the currency and creates inflation. Plus, every Turk knows that interest rates could be 25% soon. So when they get a free loan from Europe, they load up as much as they can. Well, now they're having trouble to pay for it. This has nothing to do with whether Erdogan's good or not. It's just factual. Okay, great. So we get this. Well, when Russia was in a similar situation, what did the Central Bank of Russia do? Jack up interest rates. It's what you do. So let's go back to Erdogan now. What does Erdogan do? He says we'll never raise interest rates, but he begs the people of Turkey to sell their US dollars and buy Turkish lira and prop it up. So what am I supposed to say to that? Like, is Erdogan a good president, a bad president? Well, when you do stuff like that and rely on God to fix it, and then you remove the independence of the central bank to do what they're supposed to do, it's like it's a fifth grader with central banking knowledge would be able to do that, right? So you're like, well, that's really crazy. And then you put your brother-in-law in charge of the Minister of Finance. You're like, dude, these are not good signs. So when you put all of that together, so whoever's, I can't see it in the chat anymore. You know, when I upset somebody on Erdogan being good or not, you put all that together. Let's just take it one more step, just so we can all understand Turkey. You're a Turkish billionaire. You do business all around the world. You're a sophisticated, educated, experienced person with billions of dollars of net worth on the line. What do you do in a situation like the one I just described, with no exports, lots of imports, lots of foreign debt, a weak currency just by the structure of the economy, a central bank that's not independent, a government that's not financially independent, and one that refuses to just do basic economics? They get their money the hell out of Turkey. Well, what does that do to the currency? It collapses. So this was me trying to explain in 10 minutes what happened to the Turkish lira. Okay? So you can think Erdogan is a genius because maybe this is what Turkey needs, right? But here's the problem. And maybe Erdogan's smart enough to know, like, jacking up interest rates probably actually wouldn't help that much. It's still Turkey. You still have to, right? Like Argentina jacked up interest rates 40%. Did it help? Not really. If Turkey jacked up interest rates, will it fix things? Well, at least you'd have a strong central bank, but it probably wouldn't fix things. What's Turkey's problem? First of all, they have too much debt in foreign terms. They don't have any foreign exchange reserves. Why doesn't a country like Turkey, with such a large population, export more? Like, why don't we let's build an economy in Turkey. Let's put Turks to work. Let's build things. Let's enjoy the benefits of being in a global economy. That would actually lower inflation. Look at all the developed nations of the world. They don't have any inflation. They would love to have inflation, but they keep They keep exporting their inflation. So let's develop the economy. Lower inflation, build stability, export more. But so if high interest rates didn't help Argentina, did high interest rates fix the ruble? What made the ruble skyrocket? Was it jacking up interest rates 25% in a day? Yeah, oil. So they export oil? Yeah, well, good. They export something. And what does that give them? Foreign exchange reserves. So now Russia could go to Europe and say, give us as much of this free money. You have free money, we'll take it. Give it to us. And we can pay you back because we got crap loads of foreign exchange reserves. And we export stuff. Right? Because we export stuff, we have foreign exchange reserves, right? It was all about oil. Argentina's going to need like higher wine prices, higher wheat prices, higher beef prices. I don't know, whatever Argentines do these days. But go back 100 years, they were the 6th wealthiest nation on earth. And socialism ruled it. Venezuela has more oil than Saudi Arabia. It's nasty, ugly, dirty, thick, stinky, sticky oil. Kind of like the tar sands in northern Canada. That's what they have, but it's under a lake or something, isn't it? So it's not good oil, but they have lots of it, and it can be refined. It's expensive oil. Yeah, but it's expensive, not good. It's not good oil. But they do have a lot of it. But I think we're down to 20% production levels. So think of it. The country is in turmoil. And it has been for a long time now. Let's say for 5 years. And they're still not pumping more oil? Like, what's the problem? Should have just told the whole country, look, every subsidy on the planet for the people is gone for 2 years. And everything else, like, you're just on your own for 2 years. We're cutting every program for 2 years. And we're putting everything into oil. Because what? We're at $70 a barrel. They should be profitable, right? They should be making money. But still, we're at the point where they're cutting oil, cutting oil, cutting oil, cutting oil. Like, we just need to change everything in Venezuela. But of course their infrastructure shot to hell. But again, think of the mentality. You have something worth $1 trillion, and you're like, nah, I don't want to invest into that. You're like, there's $1 trillion buried under the ground. Buy some shovels. Send people to shovel school. Like, no, I don't like that. It's hot. I don't like digging in the heat. It's hot. Where's my free money? Buy me lunch. I'm hot. Dig. Grab the shovel. Dig. Nah, man. Just buy me lunch, bro. how could you be poor and say and know you have $1 trillion buried under the ground and not invest in the infrastructure? Like, where do you get intellectually? What place do you get intellectually to say, there's the money, there's the infrastructure, I need to invest into it because the more I invest into it, the more money I get? Wow, it's crazy, right? It's crazy. How do you need like a total reboot, don't you? So we did WTI. So let's move on. Gold, I think. So okay. Look at this one. Down, 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 up, up. There's the sell. Cool. Let's get rid of that. So where are we in the world? Oh yeah, I'll do yen pair. Sure. So what could Turkey, by the way, what could Turkey export? Fruit? People? Magic carpets? That's so funny. Well, wouldn't like people living in the Himalayas be able to get turkeys? I mean, but there's the problem, right? I guess when I think of Turkey, for about 5,000 years, it's been a hub of business, right? But it didn't, I don't think it actually made anything. It was just a very awesome location and trade routes and the silk route and the spice route and this route and that route. It all went through Turkey. Uh, but it needs an export. It needs to produce something, I think. I had a friend that worked in a ceramic tile factory in Turkey. Loved it. All right. So, anyways, up, 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 down, down. Yeah. See, the problem is the tourist industry is just not that big. So, for example, Turkey has $70 billion in debt coming up. Is the if you took every foreign exchange, every foreign currency brought to Turkey and spent in Turkey, I don't think that adds up to 70 billion. I mean, or let's say it does, but I don't know. They have 70 billion coming up, and it's going to be tough for Turks to pay. Right? It's just going to be tough for Turks to pay that. So I guess to go back to the other conversation, what is going to happen? China and Qatar. Who else likes Turkey? Russia. Russia would love to get into Turkey. All right. Russia and China rescue Turkey. Okay. Is that likely to happen? You see, like the Russians would love to kick the Americans out of Turkey, take over their Air Force bases, and get another stronghold in the Middle East. They already got Syria. Right? Was that right? They already said that, John? See, I didn't know that. But you can just see, like, you can see the mentality. The Russians are going to say, oh, totally. We'll totally save a NATO ally. Oh, we might ask them to step out of NATO. Only costs 100 billion. But they have tons of oil now, so they're like, it's not a problem. Right? It's better than fighting a war and kicking Turkey out of NATO. $100 billion? Especially as a loan? You're just loaning it to Turkey? You're like, oh yeah, and if you default, we get all the American Air Force bases, right? I mean, it's beautiful. Putin would be like, this is a gift. Okay, so there's that, or the IMF. But I have a feeling the way that Erdogan was reportedly talking about this crisis on TV made me think that he's not sort of, they always talk about Turkey being East and West. He doesn't, it didn't sound very sort of Western, whatever that means. It didn't seem very democratic. And then it seemed like he threw some God in there too. So it felt very non-IMF-ish, if you know what I mean. There's sort of this way or there's that way, and Turkey's been pitched like it's both. It's East and West, and it seemed very Eastern, not very Western. So I think they're going to say, you know what, we don't want the IMF's money. Is that fair? I don't know if I'm taking it too far. And again, I'm not an expert in Turkey, come on. But it didn't seem like he was going to go to the IMF, and the IMF was going to give him and say, all right, well, now you're going to improve your democracy, and you're going to create more independence at your central bank. Because the IMF's going to come in and say, do this, do this, do this. And it's all the stuff Erdogan doesn't want to do. IMF's going to say, come in and jack up taxes, jack up interest rates, right? Decrease your debt, decrease your imports. But Erdogan doesn't want to do any of that, right? So he would rather borrow money from the Russians, and the Russians say, okay, well, if we give you money, you drop out of NATO, you give us the Air Force bases, and all that kind of stuff. We'll back you up. You'll be a dictator for the rest of your life. You'll be the emperor of Turkey. And they're like, yeah, baby. Right? Yeah. Well, so I took a whole class on international political economy, and so that's a tie, between economics and politics. Thank you. Sorry, I get sidetracked. But yeah. So if there's an IMF bailout, the lira will probably strengthen. I don't know what will happen if Russia takes over Turkey. All right. It's so sad to even think. If we lose Turkey as an ally, and they drop out of NATO, oh my God. Here you go, Bear. So by the way, if I took any of that too far, if I insulted any Turks, I apologize. I have a lot of friends in Turkey, so I don't mean to. I try to look at it as objectively as possible, because the reason I bring it up and talk about it, I'm not political. I don't care. I want to make money. This is macroeconomics and geopolitics. So I talk about it more like a strategy session. If we were a hedge fund, we should be talking about these things, right? Oh, of course, John. Right? Of course. All right. It is part of the fundamentals. It's not your normal supply and demand stuff, but I'll just say one more thing. If you were a macro fund, whether you specialize in currencies or commodities or some other aspect, but you're a global macroeconomic hedge fund. This is something that you're talking about internally and with your clients. Especially now that everyone's hearing about it in the paper, they're all coming to you, they're like, what about this turkey thing? And you're like, well, we haven't really talked about it as a firm. I mean, of course you've talked about it, right? So this is us talking about it. And I don't get newspapers anymore. I don't get the Financial Times. I don't get the Wall Street Journal. I don't get Investor Business Daily. I used to subscribe to all of them, and then I just found out they were all either wrong or just reprinting Reuters press releases. So I gave that up many, many years ago. So I don't know what you hear. I don't know what you get. I don't know anything. I don't even watch TV. So I don't know what's out there. So it's just me trying to piece it together from a macroeconomic point of view, from a currency trader's point of view of what is Turkey, what's going on in Turkey, okay? That's what's going on in Turkey. Well, Douglas says at some point it'll be a buy. Yeah, well, when, right? Well, that's why you need to talk about it. All right, so let's move on. .com. A couple of requests for yens. This is good because I've already set up all the yen pairs in past presentations, but we can start there. Okay. Okay, this was the sell. This was the take profit. Now to buy it, you need a reversal pattern, and you might get this, right? Is that a reversal pattern? That'd be a double bottom. Cool. That's one opportunity. That's in the cards. The reason I say it's in the cards is because if you're weekly swing trading, this is your buying price. This has nothing to do with the monthly target, which was here, which is actually slightly lower. Okay? If you were just blindly swing trading and you were a bull, your target this week is to, or your buy is this right at this price this week, and this is your target. So frankly, you already were in it about 5 hours ago, maybe 8 hours ago. So like when someone says, you know, what about the yen pairs? I'm like, well, you should already be in that one because you already did your job. Your job was when the market opened. The market opened at 5 p.m. Sunday afternoon. Well, what is it now? 9 a.m. Monday morning, right? So 6, 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, 8. Wow. Right? 16 hours ago, you should have bought it. Okay? Cool. Now, the next thing that's also in the cards is this. This is a monthly and weekly cluster buy zone. Well, that creates a whole different kit and caboodle, doesn't it? What is this setup? Head and shoulders. And the head and shoulders in this case would look like this. Okay? So I have 3 plans. Buy here, buy here, or buy here. Well, all of them, Jay. Did you get an entry here? If so, you have to take it. And if there's money on that, oh, well, you lost money. That's why they invented stop losses. That's why you manage your risk. This is why you pay attention to your trades. But you have to take this. My God. Gee whiz, you have to take that. It's a double bottom on it, monthly M1, and you want a double bottom? And you're looking for a reversal pattern, and you need support? Like, that's a slap in the face buy zone, right? So if you lose money there, well, Market wasn't quite ready. Not your fault. Then it drops into here, a monthly S2, a weekly M1. Of course you'd buy that. Douglas, it's usually under the next pivot. So like if you buy at M2, right, your stop is typically below S1. Or the other way you could do it is like when I swing trade, very often I'll drop a 5150 OCO, right? This is all pretty basic stuff. Right? So and then if I look at that and that's well beyond the S1, then I'll move it a little closer and really I end up only doing a 3150 OCO. Okay? Or I'll adjust it if I feel like it's an early week, I'll do like a 33.99 OCO, depending on the setup and all that kind of stuff. Okay? But I'll know if this one fails, it's going to fall here. I'll buy it so I can move my stop fairly close. Like here's the S, right? There's the S1. So if I bought it now, my stop's here, and then I have this. I could cut my lot size in half, drop my stop here, and just let it float until I know which one works, and then double up in here. You know what I mean? There's just so many ways of doing it. But the stop is the easiest. Right? The only time a stop becomes a problem, guys, is when your stop is so close and you're trying to scalp around and all these different things. You're adding, how do I say it? You're adding timing to the variable, and you want to remove as much of that timing as possible because timing can, you can get unlucky with your timing, let's say. Now, your strategy has nothing to do with timing per se, right? If you believe the yens are going to weaken because of seasonality, well, what is seasonality? Well, I don't know. It could be this week, it could be next month. We don't really know. You believe macroeconomics are going to go up. Well, what does that mean? Well, you have these certain beliefs, but right? So you don't want to get caught in, well, these are 4-hour candles. So what if it dropped a little bit and then went up and knocked you up because you only had a 10 pip stop or something? You're adding so much of a sort of a luck variable when your skills are probably not that good anyways, that I would say cut your lot size as far down as you could possibly get so you can have a wider stop. Because, what I'm saying is there's a plan here to buy, okay? And there's a plan here to buy. It would be great if your stop was far enough that luck didn't take you out. Okay. So if your stop was here, you should be able to catch this trade. So you wouldn't trade it on a 4-hour chart, right? So let's just drop it into a 1 hour. I kind of want to get off this because you're not trading Swiss yen anyways, but we are talking technicals. So your goal was to buy here, right? Because that's the double bottom. So you can see you had an opportunity on Monday to buy it already. And then this whole area was a buy zone since Sunday. So now you're looking for the opportunity. You see that this 55 is in control, so you know a double bottom is coming up on this time frame. So you're going to try one of these, right? So if you didn't buy this in general, you're going to try to buy this specifically. And either way, your stop's going to be in the same spot. You're hoping to be able to afford a stop below S1 because that's just standard operating swing trading, right? So you get where's your S1? Okay, so your S1's there. So your stop's going to be here. Your entry is going to be here. let's put this your entry, because this entry will also get you that entry, because there's actually two, right? You got your weekly entry, you got your monthly entry. So what you're trying to do is these are basically one entry. Okay, so you got that. So you're in, I can't even say that. What is that, 1080? So you're in at 1080. Okay, and where's your stop going to be? 1050. Okay. So you actually want it to be less than that, right? So let's say 1040. So you have a 40 pip stop. You should be able to afford that. Okay. So you're trying to buy this and keep your stop below this S1. Okay. Okay. It's pretty simple. Super, super, super basic. But I'll take it even more basic than that. And like I said, I'll just have it set up in an OCO. So I'll say, okay, I'm going to buy this. See, that's called strategy. Okay, I'm going to buy this. Woo! Okay. Then I drag in an EA, and I'll say, all right, I'm going to swing trade this on a weekly basis. All right. So for that, I'm going to use a 50 pip stop, and I'm going to go for a 150 limit. Okay, and I'm done. Okay. And then if I wanted to, I could say, oh, well, I'm going to put in an order at that price. And I'm done now. Look away, look away, look away. Okay? Because what that says is if it comes down here, it's going to trigger, it's going to go from a working order to a market order. When the market order is executed, then the EA kicks in and says, oh, when I see a market order executed, then I need to put a 50 pip stop loss and 150 pip limit above the executed market order. Okay? So that's what I do. I don't get caught up on stops. That's the easiest thing because I can manage my risk, especially if you're day trading or you're even swing trading. Your risk reward is so straightforward. It's not like you lose a 500 pips swing trading, right? What are you going to lose on a swing trade? 50 pips. You're like, I risk 50 pips. Okay? Which means on one mini lot, you're risking 50 bucks. On one standard lot, you're risking 500 bucks. What's your risk? 500 bucks. What's your reward? I don't know. What's your risk? 500 bucks. What's your reward? I don't know. How would you know? You have no idea where it's going. You say, oh, Wayne, well, technical analysis, and okay. Yes, you have some basic assumptions in your trade plan that if it buys here and goes there and all that kind of stuff. But you don't know if it's going there. And you don't know if it's going to go up 150 or 1,000 pips. Right? But I know it ain't going down 1,000 pips because if it is going down 1,000 pips, it's going down 1,000 pips without me. Now my job is, if I can get myself in a good trade, and there's potentially more than 150 pips, then I move my stop and I move my limit, and now I'm in a position where I'm going for more than 150 pips, but I haven't done anything different. I will go until the market tells me the trade has played itself out, we found some exhaustion and all that kind of stuff. But I can't make it go up 150 pips or 300 pips or 50 pips. Once I've entered my trade, I'm done. I can't influence it anymore unless I add more to the position. But the thing is, it's a $5 trillion a day market. You know, if I drop 2 standard lots on this, I still didn't influence whether it's going up or down or sideways, right? Someone else needs to make that decision. Many other people need to make that decision for me. I just have to be able to be smart enough not to not to outsmart them, because if I outsmart them, they're going to be going the wrong way, well, which means I'm going the wrong way. And I'll say, look at all these idiots, they keep selling, I'll just keep buying it. Whoa, 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 no good. I need to figure out what they're doing and what they're going to keep doing. So if I'm buying here, I think to myself, well, this is where bulls are going to go in, and more importantly than that, this is where bears are going to get out. So if a combination of those things happen, then more and more traders will buy as we get higher highs and higher lows, and then I can buy my first one here, and then I can buy a second one there, third one there, each one having a 5150 OCO, and manage the stops and limits. Okay. Where you get into risk reward and stuff, this goes back to my map where I explained to you before. You only take trades where you're shocked if you don't make 50 pips. And in those situations, you need to manage your trade, you manage your stop in particular, to lower risk, remove risk, and lock in a small profit. And you should be upset that you made less than 50 pips. And if you're not putting yourself in situations where 50 pips seem like inevitable and easy and minimal, then don't take the trade. Okay? So for example, if I buy this double bottom at a monthly reversal pivot, on the week I suspect reversals to happen. Am I going to make 30 pips and walk away laughing? I'm going to wait for this drop to my monthly M1 on the third week of August where I expect a reversal. Wait for a reversal at the monthly M1. And then when I pull the trigger, I'm going to go for 25, maybe 30 pips. Does that sound correct? No. So if I put myself in a solid trade plan with some solid analysis, and I'm blessed by the market participants agreeing with me and going the same way, well, how many pips am I going to make? Well, let's reverse this. On the first day of the month, we were here. Imagine selling that and making 25 pips and then telling your buddies how awesome you are as a trader. You're like, it was crazy easy. I made 25 pips. I was out in an hour. Boom! Greatest trader ever, right? And then you find out it wasn't worth 25 pips. It was worth 500 pips. Right? And you're like, what? Well, actually, in this case, 300. So it's a 300 pip move, and some dude is laughing because he made 30. Isn't that sad? To make 30 pips on a 300 pip move, and you were in it right at the right time, at the right place, at the right price. So that's what I'm saying. Like, if you put yourself into good trades, you should be ashamed to make 30 pips. You're like, oh my God, I gave away 270 pips because I got scared. I wasn't sure. I didn't have a trade plan. Right? We know this. If you sell this, we know this. It's factual. This is the target. Boom. Okay? Unless you're a bull, of course. And then you're buying here. Okay? Didn't work out. Well, you got it wrong. Funny thing is, a bull. Bulls would have bought this and made 50 pips. Bulls would have bought this and made 150 pips. And they were wrong. So what did you do this month? Well, right? You're like, well, I was wrong all month. I made 250 pips, but I was wrong. You see all the wrong setups here? There's lots of good setups even for a bull. And the bull wasn't even right. But what they're not doing is entering their trades late and all that kind of stuff. They have their lines and prices picked out in advance. This could be a buy. This could be a buy. This could be a buy, right? So on and so forth. You guys got it? All right, let's move. CAD, right? By the way, if you're a bear, sell. That's the take profit. Isn't that just amazing? By the way, this was a bullish entry. By the way, this was a bullish entry. And what might happen now? Oh, no, we might set up for a bullish entry. But like the other currency, it's not likely to do that. It either goes up sort of where we are now, so you get this kind of scenario, okay, this week, or it does this. Okay, and that's how we finish off the month. Which one is it? I have no idea. I really have no idea. So I'm going to have to use technical analysis on smaller time frames, but have a strategy. So what's my strategy? Well, I can sell here, for example, with a target here. Okay, well, I better get on it. Better get going, boy. Well, what's the other strategy? Well, I can buy it here, or I can buy it here. Right? So someone asked earlier, maybe it was Douglas. Well, then how do you get into it? Oh, no, it wasn't Douglas. It's someone else. Anyways, so how do you get in it? Well, when we're down to this price, actually in this whole zone where we are now, okay? This is part of my analysis now. My short-term trade plan is somewhere between in that black zone. I want to buy. What do I want to buy? Well, I want to buy at support. I don't know what support, but that whole area actually is support. But it'd be great if I dropped into a smaller time frame and found some other support, maybe an important daily pivot point, for example. Or maybe a psychological level like 84.50. Or, I don't know, some price action nonsense, right? Or something. I don't know. I'll find it when I look. But I know I want to buy. It's not a debate. I'm a bull. I want to buy in there, right? Great. So we'll drop into a small time frame. I know I'm in the right place. So now I just kind of have to refine my price. Now, what kind of patterns do I like to buy? Well, if it's a candlestick pattern like a double bottom at the support area with a higher high, higher low would be great. How about a moving average crossover? Yeah, I like those two. Yeah, something like that, ideally. At some place that seems like it would be a reasonable place for that to happen. Oh, okay, good. I kind of know the price. I kind of know it's coming up now. And I kind of know what I'm looking for. And I'll know it when I see it. You got it? I'm acting now as a bull, short-term bull. Great. So somewhere in the short term, I need a good reason to buy on this 15-minute chart. Let's magically create that. Okay. What if it did that? What if it came down and bounced at that? Okay, I would buy that. What about a big sort of pop and over on this area? Okay, I'd buy that too. All right. And what if it came down to this pivot and behaved that way? Okay, so now I have 3 short-term trade plans. I can talk myself into buying this crap. I can talk myself into buying this crap, or I can talk myself to buying this crap. Okay? And if I need to, I can drop my lot size to be much smaller until I've confirmed one of these is right. Because I know if none of these is right, it's going to fall quite a bit farther down to the next level. And at that point, I better want to take a break. So I can then simplify this and say, I don't want to take 3 shots. I want to take 1 shot here. And this is my best case scenario because it's a breakout. And I'm long and gone all week. Boom! And I'll put my stop way down here. Or I'll put my stop here if I want, because I'm really then getting both trades. But what if I cut my lot size in half and put 1 here, entry long, so I can afford a stop way down here, so I get this long, but I also get this long, and I get this long, all built into the risk because my stop's here. And then I say, right, keep your powder dry. I have this dry powder now to say, well, what if I buy it here, my stop's way down here, and it comes down here, and then it bounces, and it breaks off, and now I've confirmed that this was the actual entry. I'm in here, so it's down 25 pips, then I'm break even, now I'm up 25, and then it retraces. I drop a second one in there, now I'm in at full bore, but with significantly less risk. In fact, I entered with half the risk. And then I move this to here, and I'm in 2 trades. One's at break even, and one is after reversal, after a second breakout, higher high, higher low, and I'm gone. I hated the Wolf of Wall Street there. Sorry. What was the other one? The Big Short? Hated that too. Hated it. Oh, I hate scumbags, thieves. Just, oh. And these shows that, people that don't know anything about Wall Street, but they hate it, and then they see movies like that, and they're like, that's why I hate Wall Street. Like, Wall Street is mostly boring people with extreme education, and they're doing their models, and they're calculating risk, and they're doing all this, and it's not the crazy, take 5 different types of drugs by 9 a.m., right? And get, right? And all that kind of stuff. You're drunk and high all the time, and you're just making free money. And dude, that's not Wall Street, man. So Wall Street's changed, guys. So, like, for example, there was a time, okay, I was trying to think of an example. There was a time when the wheat market traded like the wheat market. Supply and demand for wheat. The price was determined and discovered through an auction system, in particular futures prices, right? Because future prices are created so farmers can hedge, and users of wheat like Nabisco cereal, right? They can hedge their exposure. And then speculators come in and create liquidity. So all of this can happen quickly and easily, right? So you have the producers, you have the hedgers, you have the speculators, we all come together, it all works. But it was based on supply and demand for wheat, and supply and demand for soybeans, and supply and demand for nat gas, and supply and demand for oil, and supply and demand for anything, right? Over, in the United States, let's say 75 to 100 years of progress, including technological. So when you're doing economics, the most important part is the technological part. It's not just the size of your labor force, how smart is your labor force. It's not the size of your technology, but it's your efficiency and all that. So think about computers adding efficiency to the financial markets, right? What happened is the market became more and more correlated. And correlated mathematically is not the right word, but let's just say the sameness. They became same. So when Japan changes interest rates, everything changes. The price of soybeans change. Okay? Now, back in the day, so let's say in the 60s, when maybe that kind of debauchery did happen in Wall Street, where you would go to the trading floor and they would have parties with prostitutes and drugs and alcohol and, all that kind of stuff. That probably did happen, but the wheat market was the wheat market. The soybean market was the soybean. The euro, the sterling futures were sterling. But now it's all linked together through the efficiency of markets and information and all this. And it's not just banks trading now; it's everybody's trading and all this kind of stuff. And we all have access to everything, and everything's done in real time, 24/7. And so Japan changes their policy, and it's either risk on or risk off, right? So if it's risk off, the Japanese yen gets strong, and that kills exports, and that kills demand for commodities. So all of a sudden, soybeans fall, and wheat falls, and oil falls, and that gas goes up, and and it's all because of the Bank of Japan? Like, what the heck does that have to do with cocoa? And, well, when you had unique separate markets, you had inefficiency. And what does inefficiency create for traders? Value, opportunity, mispricing. You want mispricing because you have an opportunity to make money, whether you're arbitraging it or you're just speculating it and whatever. But inefficiency is good if you're trying to make money. Okay? So all of this sort of changed. So it's not the same sort of world, so to speak. So now, when you're on Wall Street, it's quants. It's mathematical PhD geniuses. It's not prostitutes on the trading floor anymore. I've never worked in a big bank, so I can't quite tell you, but I don't think that's what's going on. So in the 1960s, you hired a 20-year-old girl to be your secretary, and then you hit on her and try to have sex with her, probably in the office. What would happen now if you're on Wall Street? You're at Goldman Sachs, and you're hitting on your secretary. Oh my God, you understand? You'd burn in hell. Right? The world's changed. Right? It's not the crazy debauchery and all that stuff. So the Wolf of Wall Street, we don't need that shit. We don't need that. Because then people look at me and they're like, that's what you do? I'm like, no, that's not what I do. You're Raymond at best. Right? Barry's like, it's what I want to do. You're killing it for me, Wayne. All right, go watch that guy with the yellow Lamborghini. Apparently he doesn't invest into, I know. But apparently he doesn't have a kid's college savings fund. He probably doesn't spend $4,000 a month on family health insurance. Just someone that takes a lot of money to buy a car, you're like, clearly doesn't understand anything about money, right? Amazing. But yellow Lambo. So I don't know. So you can see these things are setting up. Do you see how I break it down? I had a strategy 8 months ago. We're now at the sort of the place where seasonality, we can start looking for that strategy to take hold. And then we have a monthly strategy that sets up, which actually corroborates my long-term strategy, because a lot of these monthly pivots have issued potential reversal setups, but I'm already waiting for reversal setups. So do you understand how I can totally drink the Kool-Aid? But I'm also smart enough to know I've drank the Kool-Aid before and I've been wrong. But most times, though, right? Most times I'm only wrong on time. So like I told you, like when you're trading a 15-minute chart, don't trade with a 10 pip stop. You just, if you're scared, get a better trade plan or cut your lot size and have much bigger stop. But try not to get, you don't want luck. You don't want to say, well, I lost a lot of money, but I was just unlucky. Well, then you're a gambler, right? Nobody wants that. Just say, well, I have a solid trade plan and I manage my risk appropriately so I can get in, right? So if you have a solid trade plan, then great. But so now we have like this long term, and then we have the smaller term, and now we've drilled all the way down to this 15-minute chart, and now I know I want to buy at this price, and I know I want to buy at this price, and I know where my stops are. Am I getting an entry right now? Okay, this is for you to now practice. First of all, do you have this layered, multi-time frame, fundamentally based, seasonality-driven trade plan? If you don't, you're probably trying to live on your 10 pips a day. Do you guys get emails like that? The 10 pip a day, you're going to live in a nice neighborhood type email. You'll drive a nice car. You'll have a nice watch. Your children will be beautiful. You don't get emails like that? I do from time to time. And I'm like, wow, really? YouTube ads, you do? I don't know who sends me these emails. But like, how much money do you have to have on a trade to live a good life on 10 pips a day? You get it? So one mini lot is $10 a day. That ain't gonna do it. So one standard lot, like 1,000 a day, Barry. That's why I say, like, email me, and if you already emailed me, just email me again. Yeah, about 1,000, I think. So anyways, yeah, so 10 pips a day on one standard lot is $100 a day. Are you living comfortably on $100 a day? It's $2,000 a month. So, right? Yeah, so all of a sudden you're like, dude, you're going heavy. You're dropping not 100,000 on these. You're dropping an M. You're trading 200 million. No, sorry. You're trading 20 million in volume per month. Right? So that's your monthly volume. How much money do you have in your account? like it just, but people get into this, like they totally get into this. They're like, yeah, this is good. Do you understand? Like, oh, by the way, and that's profit 10 pips a day, right? So I hope, right? But one good trade is worth 200 pips, right? Like that's the whole point of the swing trading group. Like here's what the swing trading group would do. There to there. Boom, 200 pips. It's one trade. Okay. Funny thing is, this is a trade too the next week. And if you're still a bear, this is also a trade this week. Okay. So what I'm trying to tell you is you need better trade plans. Okay. The 10 pip a day thing is just, it's not gonna happen because you have too much money risked on the trade unless you can live on $10 a day. Okay. I don't think you can. I don't think even $100 a day is going to do it. So what I would like you to focus on is truly learning how to trade, right? Don't even think about making money. Just learn how to trade conservatively with discipline. And by the way, it might take you 5 years. It might take you 3 years. Like I said before, I signed up for an elite program at Harvard. It's going to take somewhere between 40 and 100 hours a week worth of effort on top of my job, on top of raising my kids, on top of being a husband, on top of doing all the other stuff. It's going to cost me a crap load of money, and it's going to take me 4 years. So, great. So when I tell you, look, it's going to take you 4 years to master Forex, even just starting now. I don't care if you've been, trading for 2 or 3 years. Starting today, it's going to take 100 hours a week. No, I won't say that. It'll take 40 hours a week on average for the next 4 years. And during that period, don't even try to make money. Don't make withdrawals from your account. Just grow your trading account. You need to think that way. I really think you need to think that way. And then 4 years from now, you will be a really, really good trader. You'll really know what you're doing in all kinds of ways. And you'll be able to sit down with your clients and talk about like what's happening in Turkey and how you'd like to take advantage of it. Now, you might not get in today, but you're looking for interesting things to happen, like maybe a bailout from China, Russia, Qatar, or from the IMF, and that'll really change things because that'll be a way for Turkey to get their hard dollars so that they can draw down these loans and really roll them over. And that this rollover period is going to happen several times again in the future, in which you may, look to take profit or even short the lira, even though you might be looking long now. You'll say, well, when they roll over these loans, they'll come to term again in the future, and that might be an opportunity to short because once again, Turkey will be short on dollars, right? So anyway, so you can sit down and explain these things, and all of a sudden you find yourself running a Forex fund or being a portfolio manager at a bank or a hedge fund because you really know your stuff technically and fundamentally. You got the track record to show it. And all of a sudden, now instead of trading your $25,000 or $30,000 account, somebody gives you a stack to trade. They're like, we'll start you small. Here's 5 mil, and we'll watch you trade for the next year or two. And if you're good, if your returns are great relative to beta as well as risk-adjusted performance, then we'll grow your stack for you. You're like, cool. What are you going to pay me? Oh, 20% plus $200,000 a year plus benefits. Nice. And you'll get in your Subaru and drive to work because it's the smart thing to do. But it can be yellow. That'd be great, right? I got my yellow Subaru. A friend of mine made $40 million. He went out and bought a Subaru, and he refused to pay for the hubcaps. Forget about wheels, hubcaps. So they took the hubcaps off. Nice. I don't know, Jim. Depends on their strategy. Yeah. But the thing is, they can adjust all that. So let's say you know how to trade. Okay, Jim? You know how to trade. You're conservative, disciplined, all that kind of stuff. You got it. Right? So, like for example, so I have a system where I can have a bunch of traders trading for me, and I can oversee all that kind of stuff. And if somebody is trading too much, like Jim, you're trading with too much, too much leverage, I can just dial it down. It doesn't affect you. I'll just dial it down so I can get it. But it wouldn't change the way you trade. What if I wanted you to take 5 times more risk? You wouldn't change your trading, right? You just change the lot size. In this case, I could go and change lot size. It's just like turn this dial and pull this lever. But Jim, your trading shouldn't change. So what kind of returns are they expecting? Well, that's a function of risk. It has nothing to do with the trades you take. Right? Whether you're trading a mini lot, a standard lot, or 10 standard lots, right? A big, a standard, or mini, or even a micro, your trading actually shouldn't change at all, right? And returns are a function of risk. So you want more money? You put a bigger lot. You want less money? Less lot. But that's where the return comes from. The trading is solid and stable to the strategy and to the market conditions, right? And only the market conditions, so the beta, right? Only the beta and the level of risk dictate the return, not the trader's alpha. The market and the amount of money on every trade. But that has nothing to do with the trader. Or shouldn't have anything to do with the trader. Where do traders go wrong? When they start to put too much money on the trade, right? What are they trying to get? More returns. Well, the solid trading strategy should dictate everything. So if you want more returns, like I'm trying to get you guys, right? So let's say you're not trading other people's money down the road. How do you get the higher returns? Well, let's say you have a rule. For every $100,000 of your money, you trade 1 mini lot. Or 2 mini lots. Let's say you like 2 mini lots. That works for you, okay? For every $100,000 in cash, you trade 2 mini lots. Right? Grow your account to $150,000 and trade 3 mini lots. Well, how long did it take you to grow a 50% return? Let's say a whole year. So in year 1, you made $50,000. But now in year 2, you're trading 3 mini lots. So in year 2, doing nothing different, you would make $75,000. Now you have $225,000. How much can you afford now? Almost 5 mini lots. Okay, so now what? Now that next year you're making $125,000. Now you're up to 3. All of a sudden you see how you make more money. You grow your trading account. Has the risk on any given trade changed? One year you make $50,000. Another year you make $200,000. Has anything changed risk-wise? None whatsoever. Has your trading changed? You make different trading decisions. Nothing Absolutely nothing has changed. Your trading strategy, your risk profile are exactly the same. So what changed the reward so much? Assets under management. That's where I want to get you guys, where you're really good at technicals and fundamentals, and you're really, really focused at building your business, right? How many people like expect to open a restaurant and a year later drive a yellow Lamborghini? Especially ones that have never opened a restaurant before, never run a small business before, doesn't know anything about marketing, doesn't know anything about having food inspectors show up, doesn't even know how to cook. Oh, I'll go to a bank, I'll borrow a bunch of money, I'll buy an old restaurant that has failed 2 or 3 times, I'll buy that sucker, we'll redo the kitchen, we'll redo the decor. Oh, I don't know, how hard could it be to hire a bunch of waiters and some kitchen staff and a chef? I mean, it can't be that hard, so I'll just hire a bunch of them. So I'll drop millions of dollars into the building the restaurant and hiring the people and building to that and building to this and building to that and changing, building business cards and menus and this, that, and we'll train everybody and we'll buy a whole bunch of food and then we'll get a whole bunch of people to show up and boom. And then I'll go shopping for my yellow Lambo, right? I'll be dumb enough to buy a Gallardo. Yeah, no. Actually, it's not that easy, is it? So put yourself on a 5-year plan. Focus on getting really good. Focus on truly developing skills, truly learning and understanding the market. Not just like, well, I guess if I look for double bottoms or the higher high. No, like understanding the market, right? Really mastering your domain, but enjoying the process, and then growing your account bigger and bigger and bigger. And then you'll either have a nest egg or, a stack of your own that you've grown. It might take you 5 years. Remember, the longer you don't pay yourself, the faster you'll make money. So can you go 5 years without paying yourself? If the answer is no, then you could say, well, if you can get down the path of becoming a good trader with a track record you can show somebody, then let's say that takes you 2 years. Right? Let's say you join like MetaTraders or something, right? 2 or 3 years later, you're like, okay, I got a track record, now you can invest. Well, then you got to be ready for that. You got to be on one plan or the other. You can't just wing it like, I'll get really good and then I'll start making a lot of money. And I don't believe you think that way. That you'll just get really good and just make a lot of money and it'll just take care of itself, right? Scalp your way into a mansion, into a Lear jet, right? What did Gecko say? Not $1,000 suits sitting in first class. I'm talking about liquid, owning your own plane, right? Well, you got to be smart, and you got to have a plan, and you have to have a vision so that you can carry out your plan, right? And that you have intent. When I sit down on my charts and my computer, while my computer's booting up, I say things like, wonder if the CAD yen is still holding up on the M1. Sure would like to buy a dip. That's how you do it. Your charts don't have the answers. You have the answers. You're the expert. People will pay you money because you have the answers. Let me explain to you what's happening in Turkey and how I plan for us to make money. If you can carry out a conversation like that, you'll probably be able to run your own fund one day. If you want to be a pure technician and just be a pure trader, then you're going to need to get really, really good at a strategy that you can repeat in all market conditions, up, down, and sideways, and have very, very small drawdowns, very, very low volatility, and be benchmarked not against the S&P 500, but against the market beta, and so that you have solid risk-adjusted returns. And if you can prove that, once again, you can attract money. Or if you give yourself 5 years or 10 years, you can grow your stack. And the more money you start with, unfortunately, the faster you can get to a tradable stack. But when you trade a lot of money in the beginning, you suck in the beginning, you're most likely to lose that money. So what you want to do is have that nice stack, that starting point. You want to use it and leverage that when you're good, not when you suck. And that's a hard decision to make. So I wouldn't make that decision until I've been profitable for, well, like I did. I traded a demo account for 2 years. But I had a job. I made great money. I was vice president of a venture capital firm. I was happy. I didn't need the money from Forex. So anyways, I hope you get the message. Might be a quiet week, might be a good week, might be a bad week. We really don't know, but I am here for you every single day. We do have the Powell speech on Friday. So once again, I think most people sleep this week. You watch. 6 weeks from now, we'll look back. This might be the turning point. While everyone else is crying and snoozing, this might be where your best work gets done. Or nothing happens. But do not fall asleep. Don't get lethargic. You say, you know what? I'm doing my job. This might be it. This might be the time, the place, and the price. Okay. Yeah, I'm looking forward to the swing trading group too. 17 weeks. Yes, I did, but you know, I do stuff in the morning, so I don't really get to that stuff until the afternoon. But I saw that, but about the golf, that was pretty funny. I chuckled. But yeah, did you need anything from me though besides that? I know you're in, right? Johnny's in. Cool. Oh, summer school. Yeah. So no, I don't know what that is. So I'll have to look. Oh, Pete, good. Send it again, guys. Send it in. Jimmy's in. Does anyone else? Here, you know what? Let me stop the video, and then anyone that needs help with the swing trading group, I'll do that. All right, hang on. I'll turn off the video.